Welcome. In this video, will ZBCN coin skyrocket upwards? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structures on the chart was the long-standing descending trend line. This trend line had previously acted as a resistance level where the price reversed multiple times and selling pressure was evident. However, this picture has now begun to change. The price has successfully broken above this descending trend line with a strong and high-volume breakout. This development marks a critical turning point not only from a technical analysis standpoint, but also in terms of market psychology. Breakouts of such long-term descending trends to the upside often signify a significant shift in market power and the potential beginning of a bullish wave. The upward breakout of the descending trend line is a strong signal that buyers are starting to take control and selling pressure is weakening. Especially following this breakout, the price pulling back toward the trend line, a move known as a retest, is a healthy and technically expected behavior. This shows that the trend line, which previously acted as resistance, is now being tested as support, confirming a shift in trend direction. The retest phase is a highly critical and positively interpreted stage in technical analysis. This process provides investors with confidence in the new direction of the price. More cautious investors in particular tend to see these pullbacks as buying opportunities. The price gaining upward momentum again from this former resistance turned support level helps to build a more solid foundation for the uptrend. Currently, the chart presents exactly this scenario. The previously dominant descending trend has been broken, the price is pulling back to test this level, and a potential new bullish wave is being set up. These types of breakout and retest structures are considered indicators of a healthy trend reversal in price movements. If this retest process is successfully completed, meaning the price holds at this level and begins to move upward again, it confirms the trend reversal. This may lead to an increase in bullish positions in the market. Many technical analysts and algorithmic systems interpret such successful retests as buy signals, which can result in rising volume and subsequently stronger upward movements. In the current situation, the fact that the price is in the retest phase after breaking the descending trend can also be seen as a buy zone. Such levels are often known as areas where large investors and institutional players re-enter positions. The transformation of previously resistant levels into support is referred to as a role reversal in technical analysis and is considered a very positive structure. The effectiveness of this structure increases confidence in the sustainability of the trend. Additionally, the volume data accompanying this technical structure is also very important. The volume increase at the time the descending trend line was broken supports the notion that the breakout is genuine and not false. Strong breakouts usually occur with high volume. Now, with volume rising again, an upward price reaction is likely. This shows us that buyers in the market are still strong and eager. Moreover, this retest phase is often more clearly visible on larger time frames and provides more reliable signals. On daily or weekly charts, such breakouts and retests are often precursors to long-term trend reversals. Therefore, the current process may not just be a short-term reaction, but could also mark the beginning of a larger bullish trend. From this perspective, carefully monitoring this retest phase can make a significant difference in investment decisions. But we can't rely solely on trend lines for analysis. Let's now take a look at other metrics as well. Stay tuned. When we carefully examine the chart, a very clear and strong ascending channel formation emerges. This formation clearly reveals both the upward potential of the price and the key technical support and resistance levels within a defined trend. An ascending channel is a classic and reliable trend structure that shows the price has been forming higher lows and higher highs over time. Within this structure, price movements typically find support at the lower band, head toward the midline, and gradually tend to rise toward the upper band. Right now, the fact that the price has received strong support from the lower band of this channel is a highly significant development. Ascending channel formations are among the clearest technical structures that confirm the market is positively structured and that the overall trend is upward. The existence of this structure not only provides insight into past price movements, but also guides investors on possible future movements. Especially when the price reacts strongly at the lower boundary of the channel, i.e. the support level, it indicates that the formation is active and functioning healthily. Such reactions confirm that buying pressure remains strong and that the market has the potential to maintain its upward momentum. The structure currently observed points exactly to this situation. After reaching the lower band of the ascending channel, the price paused, went through a period of consolidation, and then started to show upward movement. This is a healthy recovery behavior frequently seen in technical analysis, and often marks the beginning of a bullish move. At this stage, the price's first target will be the midline of the channel. The midline is typically a zone where the price frequently interacts and reacts, and it also serves as an area that tests whether momentum is strengthening. Reaching this midline indicates that the upward movement is continuing in a healthy manner and sets the stage for potential targets toward the upper band. The fact that the price is currently receiving support from the lower band of the ascending channel points to an important opportunity zone for investors. Such areas are historically known to be zones where buyers stepped in strongly. According to technical analysis, buying at support levels provides the necessary energy for the price to climb again. Moreover, the effectiveness of the lower band reinforces the validity of the formation and gives a strong technical signal that price movement within this channel will likely continue. Therefore, the current structure offers valuable insights for identifying both short-term buying opportunities and the long-term trend direction. The rhythm of price movements within an ascending channel also reflects investor psychology. Support from the lower band signals that the market has found a bottom and is regaining strength. The journey toward the midline shows that buyers have re-entered the market and are eager to push the price upward. Especially when such movements are accompanied by increasing volume, it further strengthens the indications that the uptrend will be stronger and more sustainable. In the current scenario, if the reaction from this support zone is supported by rising trading volume, it becomes highly likely that the price will soon test the midline and possibly begin a move toward the upper band. It is important to remember that in technical analysis, the more a pattern works, the more confidence investors place in it. In this sense, the ascending channel is an extremely reliable and stable formation. The rhythmic movement of the price within this structure allows investors to manage expectations and build their strategies around it. In the current situation, the fact that the price started to gain upward momentum after testing the lower band shows that the channel is working successfully and that the market structure is progressing in a healthy manner. From this point on, the key level to focus on is the midline. When we examine the chart, we see that the RSI indicator is positioned at a very critical level. RSI is an important technical analysis tool that helps us understand the direction and strength of momentum in the markets. Currently, the RSI is in a support zone where historically prices have often reacted to the upside and buying pressure has increased. This is considered an important turning point for investors, not only technically but also psychologically, because in the past, RSI rises starting from these levels have often led to upward accelerations in price movements. Therefore, the presence of RSI at this level stands out as a positive signal that should be carefully monitored. From the RSI's point of view, such lows are usually areas where it approaches oversold zones. Oversold areas signal that buyers rather than sellers are starting to enter the market and momentum is about to change direction. If the RSI has reached the lower support band, it could potentially signal the start of a reversal. Especially if the RSI performs an upward bounce at these levels, this would be a strong sign that would not only set the stage for an increase in momentum but also for an upward movement of the price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.